Hey everybody, this is Tad Hill. I am one of your tri-hosts to the Retire with Freedom radio show. I am here with my fellow tri-hosts, Toni, my wife, and Tyler, our daughter.
Hello.
So looking at the bright side. So, okay, now I'm talking to you, the person in your car or in your workshop or on the way to Walmart. You owe a lot in capital gains taxes. Let's look on the bright side of that. So we have this conversation with folks a lot, guys, right? So if you have money in after-tax accounts, so this is actually something, we don't get crazy technical on this show because it's hard to do that on the radio and make sure you're being thorough and accurate.
Yeah.
But it is really common, guys, that people don't understand the difference between how IRAs and 401ks and all that get taxed versus non-qualified accounts, which means non-tax qualified.
Yeah.
So when you hear the word qualified account, that means tax qualified, which means it's qualified to be tax deferred. When you hear non-qualified, that means it's non-tax qualified, which means you pay taxes before you put the money in. And then every time you make money in that account, you owe taxes.
Right.
On an IRA or a 401k, you never owe taxes until you take the money out.
Right.
But when you take it out, you're taxed at your highest marginal tax rate.
Yeah.
So everybody talks about tax deferral and how wonderful it is because theoretically you're going to be in a lower tax bracket in retirement. But we do an entire explanation of this in our retirement course on why that may not actually be the case, and the government could potentially be playing a much more complicated game than we are. So we talk about that in our retirement course. If you've never been to one of our retirement courses, we do it right here in our office on Valleydale Road, right off of 65. And it's 2.5 hours of a deep dive into all things retirement planning. So if you've never been to our course, I strongly encourage you to call or text us at 205-988-0006. Call or text 205-988-0006. We can get you signed up for the next one, and they do fill up quickly.
Yeah.
So I would take advantage of that. So you owe capital gains taxes. What that means is you are in a non-qualified account. You paid tax before the money went in, and now you've grown your investments.
Yeah.
You know, you bought Coke stock or Apple stock or whatever, and all in all, you got $500,000 invested in this account, but now it's worth $1 million. And that's one of the tax traps that people find themselves in. You are now trapped because the only way to get your money out is you've got to pay capital gains taxes to get it out.
Right.
And depending on how much money you make, you may be in a 0% capital gains bracket. Most people are going to be in 15%. If you make a certain amount of money, it's going to be 20. That changes all the time. So I try not to talk about numbers that are going to change all the time, but you can Google it. How much are my capital gains taxes going to be based upon my income? But here's the deal. If you invest money in after-tax accounts and you make investments, from a tax perspective, there are two options in the long run. What are they, guys?
You can either owe taxes or not owe taxes.
Yes. And then I ask people, so which do you prefer? And everybody says,
they don't want to owe any
Of course.
taxes.
Who wants to owe taxes?
right, we don't want to owe taxes. So Tyler, why don't you tell people what that means? If you don't owe tax in a non-qualified account, you've either passed away and given that money to your kids because they get a step up in basis. But if you are going to need this money, it means you've never done what?
You've never made any money. Because if you're not owing taxes in an account like that, what that means is you bought Microsoft stock and you held it long enough to where then the price of it dropped. And so you're now actually losing money.
Yeah, the only way that you're not going to owe taxes in an after-tax account is if you never touch it and you just leave it to your kids, or you never made any money.
You wait until the price goes down.
And so one of the things that we do for people, and I would strongly encourage you to give us a call and either come to our course or come in for a visit. One of the things that we do for people is we explore options to liberate those trapped dollars in after-tax accounts. And it depends on your situation. It depends on a lot of things. But if you've got a highly appreciated account and you're like, yeah, I'd love to be able to use that money to travel or do whatever, but I don't want to sell any of it because I don't want to pay the taxes on it.
Yeah.
There are strategies that can help you deal with that. And so I would strongly encourage you to give us a call and do one of two things or both. Come in for a visit where we can actually walk through and we do a free analysis of everything that's going on in your financial life. And we give you very direct feedback about all the good stuff and the things that should be addressed or fixed and how our process is designed to go about doing all of that. And so this analysis, it is the start of our planning process, but typically it's very enlightening for people, right? And so I would come in for a visit or I would come to our course. My suggestion is if you're trying to figure out retirement and you're going to be retiring in less than 10 years, I don't know of a better investment of your time than to come to our course and then come in specifically and let us do an analysis for you personally. And the way to do that is to call or text us at 205-988-0006, 205-988-0006. So again, it's not necessary for you to live in Birmingham. We help people all over the state and even outside the state. You know, people driving through, going to the beach from Indiana or wherever, and they hear us, and we can help you regardless of where you actually reside. But I would do both. I would come to our course and I would come in for a visit. Call or text 205-988-0006. This is Tad, Toni, and Tyler Hill. We are the co-hosts of the Retire with Freedom radio show. So just so you know who you're listening to and what this show is about, it is a retirement planning show that is designed to help you get the best possible plan in place for retirement. Tyler, you're about to say something?
I was sitting down with a client last week about this situation where they have an after-tax account where they actually invested in Microsoft stock, and their account has now grown to over 600,000. I mean, 600,000 plus, but 500,000 of it is gain.
So they invested 100,000. It's now worth 600,000, which is fabulous.
No, it's great. But the beauty of it is, again, I had to have that conversation of, hey, while we do have all of that gain, now is the time to be doing something. And so we did analyze their situation and were able to be strategically kind of getting some of that money available. So we're not kind of taking that tax bill.
Doing it a little bit at a time and probably doing some tax loss harvesting if they have other holdings in the account that might be down.
We have some time before they retire, but they're actually going to be needing that money. So we're actually going to be using that money for their income plan. But had they not gone ahead and got a plan in place while they were working, they were going to be set up in a situation where, hey, now we're retired and having to pay all that gain at once to get access to the money.
And that puts another thing, talking about doing this before they retire. And I know this is talking about looking on the bright side. And so nobody likes to get laid off or whatever, outsource your job or anything like that. But let me say this, if you do sit down with us or come and see what that would look like if you are, that may happen. Oftentimes, getting downsized or outsourced or laid off or whatever you want to call it, if you've got a plan in place and you know how things are going to work ahead of time, just like this, and, these guys need their money and we're already putting in place a strategy in place where we can liberate those dollars that they're going to need to live on. Same thing if you get laid off. I mean, it won't be great and it might be unexpected, but if you've got to know what's going to happen when that does happen or if that happens, the stress level is just, so much less. I mean, it's almost, and a lot of times it's like, okay, I wanted to work another 5 years, but I'm getting laid off at the end of this year. So it's not that big of a deal. We're making a few little minor adjustments at that point.
Right.
So much easier.
Because we have a plan.
Yeah, there's a plan and we kind of know how things are going to play out. And it's so much easier to make small adjustments rather than having to make a huge pivot.
Well, and what our plans are designed to do is to assume that some things like that are going to happen at some point. I mean, nothing's going to go perfectly. Right. So we need to have a contingency plan. So not only do we need to have a plan, we have to have a contingency plan. Right. And Toni, you talk about this a lot. Sometimes you, our listener, you may be thinking, well, I've got a lot going on. I've got a lot of the moving parts. We're moving, or, we've got a grandbaby, or I'm going to be I'm going to be retiring, or I might be changing jobs. And so I've got a lot of moving parts. And so I'll get a plan in place when everything settles down.
Oh my gosh. Yeah. When does that ever happen for anybody?
Right. So here's the, let's think about this logically. Do you need a plan more or less when you've got a lot of stuff going on? Like if everything's settled down and everything's, you have certainty built into everything going on, you need a plan less then than you need a plan when things are all over the place and things are changing in your life. And one of the things that's going to change is you're going to retire at some point. Yeah. And so is it better to have a plan in place sooner so that we can anticipate the changes and have a plan for those things? Or is it better to wait until a whole bunch of things beyond your control happen?
And now you've got a situation.
Now we're having to go back and retrofit things. So that's all we do is focus on helping people that are either already retired or about to retire. And we're helping you answer questions like, how much longer do you have to work? What can you confidently spend in retirement? When should you take Social Security? What should you do with your pension? Should you take the annuity? Should you take the lump sum? If you're going to take the lump sum, what do you do with it? Should you pay your house off? Is it okay to buy the lake house? Is it, are there ways for you to reduce your tax burden over time? That's a huge one, guys. And most people do not know how to figure that out. So if you've got a large amount of tax deferred money in a 401k or an IRA, our tax analysis is a great way to figure that out. All of these are things that we explain in our course. In a general level, it really gives you an overview of retirement planning and the things to be thinking about and how to think about them. And then we specifically give you very detailed feedback in our free analysis that we do one-on-one, either over Zoom, over the computer with people that aren't in Birmingham, or physically in our office on Valleydale Road, right off of 65. If you want to take advantage of any of these things, we can help you, but you have to take action. And the way you take action is call or text us at 205-988-0006, 205-988-0006. You can call or text or Google us. Tad and Toni Hill, Freedom Financial. It won't be hard to find us.
I'll leave y'all with this for you, our listener. Unless you're a retirement planner is your vocation, your retirement is the first one you've ever planned. And are we normally the best at something we're doing for the first time?
Yeah, so let us help you because we've got the experience of helping hundreds of people do this.
Insurance products are offered through the insurance business Freedom Financial Group. Freedom Financial Group is also an investment advisory practice that offers products and services through AE Wealth Management LLC, AEWM, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by Freedom Financial Group are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Freedom Financial Group is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Freedom Financial Group.